Hi, this is Anthony. Welcome back to my show. When it comes to Scott Galloway, I'm of mixed opinion. I think that he has a lot of good insight into marketing, but when it comes to stock investing, I don't always agree with him. I'd rather not hear his opinions, pro or con, on the Trump administration. I'm just not that interested, and I think he's suffering from Trump derangement syndrome anyway. I can find that from other websites and YouTube channels if I want. He starts out a lot of his videos with penis jokes and proceeds to talk about his current and former drug use. I'd rather not hear about that either. But lately he's been talking about selling 75% of his American holdings. For instance, he went on My First Million, which is a great channel, talks about that. Here's another one on his own channel where he's talking about his Sell America thesis. Now, I'm an American and I have nothing against investing in overseas companies at all, you know. But I think that the whole point of investing is to end up with as much money in the future as possible, of course, legally. Just talking about the investing in the stock market and publicly available companies or mutual funds. So I asked the question, what's the best international fund? This is what came up recently. There's a couple that are shown here. The highest one is not Fidelity Worldwide, but I'm going to look at that for a second just because a lot of people have accounts at Fidelity and you could get it, with any account that you have. But its ticker symbol is FWWFX. So let's take a look at that. And again, my thesis is that you shouldn't, not that you shouldn't invest in overseas, but do you really need to? The S&P 500 is a pretty good measure for Americans of American companies, but what component of the S&P 500 does not have some international sales? My thesis is all of those companies are selling overseas in addition to selling to Americans, whether it's products or services. So there's Fidelity Worldwide, the number three, as listed on that one chart. There's the 1 month. Let's look at year to date. Year to date, down 3.5%. Last 52 weeks, it's down 11.19%. 5 years, it's only up 18% total. That's not annualized, that's total. So in the last 5 years, you'd be up $5.30 if you had your money in this. And max, let's take a look at it. Goes back to June 1990. So that's 35 years. You're only up 235%. That's not really great over 35 years. So here's an interesting feature if you haven't looked at it. Hit compare. Okay, so it's going to allow us to compare to whatever you want. Here's the S&P 500. So in the past 3 months, they're both down about 12%. Let's look at 1 year. The S&P is up 10%, almost 11%, and Fidelity is down 9.45%. Let's look at 5 years. S&P is up 86.55% total, and that's not including dividends. That's just the price on the stock market. And of course, the Fidelity is only up 15%. So that's roughly 3% per year over 5 years. And looking at it, max, here it only goes back to 1996, so about 30 years. So in 30 years, you'd be up 114% on the Fidelity Worldwide, and you'd be up a fairly respectable 687% on the S&P 500. Of course, you'd be making some dividends, not a lot, but some dividends in addition to these. So there certainly are periods of time when international stocks have done better than American stocks, but overall, I think the American stock exchange is going to give you a better return with foreign exposure. Let's look at another one. This is the Financial Times Stock Exchange 100. It's pronounced FTSE. It's a British financial publication. And here I'm comparing it to the S&P 500, the spider. Year to date, FTSE is running ahead of the S&P 500. 1 year, S&P 500 is doing better, 10%, and the FTSE is up a little over 6.5%. 5 years, the FTSE is up 34%, 34.5% roughly, and the S&P 500 is up 81%. And looking at max, going back to 1993, so that's about 32 years. 32 years, the FTSE is up only 204%, while the S&P 500 is up almost 1,200%. And if you look at this chart, as far as the British economy is concerned, that's really embarrassing. You know, there's no good reason that the birthplace of modern capitalism should be doing so poorly compared to their American daughter. But that's what you get with British politics and their philosophy and the economic culture that especially the Labour Party after World War II put into effect. So what are your thoughts? This is not financial advice, just some information, just some entertainment. Do you agree with me that just putting your money in American stocks, in particular, something long-term safe like the S&P 500, and again, I'm talking about people with a long-term horizon, putting money in, either dollar cost averaging or putting in on occasion, would be doing better than putting it into foreign stocks or foreign mutual funds. Obviously, you can put some money into individual names and make more, but the S&P 500 hasn't done very bad over the long term. Love to hear from you. If you haven't already, please do subscribe, hit like, check out my other videos, leave a comment, and I'll respond to you eventually. Thank you so much.